Welcome to Trading Lounge and the US indices. We'll look at the S&P, the Nasdaq, and Amazon, maybe Google as well. And with this market here, we were looking at wave 5 of 5 of 5 here, but we have an alternative wave 3 here as well. And we also, and I wasn't sure which one it is here. On the Nasdaq, I can see that it's basically we're in a wave 3 that's not quite completed yet. So we had the move down through here, and we were looking at not using the wave count, but just using strategy. So we were looking to go low, short below these lows here, and in a nutshell, looking to go long, basically on top of 72 or a breach of this one here. It drops short here, but we've had a strong bounce here. It's pulled back down to the wave 4 of 1 lesser degree. So we need to make some adjustments here now for this. So just let me do that. This appears to be the new count here. So we don't need that one. We don't need that. We can replace that with that. We can replace that with that. And an A and a B and C wave here for this one here, and then we'll be looking for a move up here, so I'll just clean these out, don't need these. Wave 4s can get a little bit more complicated, but it does appear that we've got an impulse wave here, so we can take this segment here and move that segment to the top here. So this is going to give us our long trade here now. So we don't need that. I hope that was of some value one way or another. Just cleaning these up while I go here. Okay, so we'll just save that for a moment. I mean, the main thing here is it's very clear that we have this 3-wave structure in play here. That's the main point here. This wave 4 may get more complicated. We could end up with a situation where it just becomes more complicated. Let me just finish this off a little bit here. Let's just, I'm thinking that we've got wave 1, 2, I'll just borrow this one, oops, 3 up here. We'll look at this on, this is a 1 hour chart here for this market, so put that here. Obviously wave 2 would be looking for a 50-60% retracement level, but it doesn't have to do that either. It could be just 40% or even shorter as well, but the main point here that we don't miss is that, you know, we look for taking these highs out here. You could probably get in a little bit earlier. So here we're looking as a crow flies, wave 1, wave 2, wave 3, wave 4, and wave 5 coming up into this space here. Could also borrow this as well here. Might as well finish this off here. And then that should give us our top in play here, which will be 5, 5, 5 of intermediate wave 3 here. Don't need that. Okay, so that's our that's our rough pathway here, 2,600, and the trade would be triggered if this top here would be taken out here. And the reason we think that for is because this structure here is corrective. It's not an impulse wave. So if we go to the our tick chart now, we've got a bit more detail on these things. So we'll be looking at it like this. This is 100 ticks. You know, and even though I got this count off the Nasdaq, I could see it in stocks in the on the New York desk as well. I mean, I could see the stocks, you know, having basically 3 waves up, and many of them needed their 4th wave and their 5th wave to the upside here. So in this case here, there's a couple of things here. Is that from this top here to this low here, back up the 50-60% is here. It just happens to be where the resistance is from these lows here, because that's what markets do. They mirror each other. If it drops quick here, then it's going to move up fast to this block of volume here, and mirror that. We've got this psychology of numbers coming into play, 65, 72 and 80. There's a lot more numbers within group 2 here as well that are really important. 68 is important, 70 is important. Then we've all got group 1 through here, 1, 2 and 3 here. 5 is important. And also 8 is important. We have another micro group 2 in here. There's a whole lot in here. I just put the rough skeletons in here because, as you can see, it plays out nice enough to use, most of the time. So they're just guide sticks. So in this case here, we're looking for 5 waves up here into the 61.8% mark. So it can drop to this point here. So if you're going to go in early, make sure you keep your stop out of the way. And the idea is to go long on tested support of 25.65. That would be the catalyst for a safe trade to the upside. It needs to chip away at this supply here, supply just meaning sellers, and and rest on that number 5 there before heading higher. The chance to add to the position here would be on 72 as a nice tested support. And then you can also add on 80 as well in this case, and then we can look to head up towards the 2600 here. Okay, so that's pretty much how that pans out. The Nasdaq is slightly same but different in that I was counting from this wave 4 here as 1 and 2 and 3 and 4 and 5 here for wave 1, back for wave 2. I haven't really pulled all this out here. I never thought this was actually number 3 here because it just wasn't long enough. So I'm keeping this as 1 and 2 and 3. ABC here, 5, 1, 2, 3, 4, 5 here. 4, in fact, we may not even be able to use the spike here, so it really may need to go on here if it drops a tad lower here. But either way, this would be the wave 4 here. So the long trade would be on top of this one here. Okay, that would be the safe way to the upside there. I'll just save that. And some of the drivers behind these, of course, is Amazon, or the Frank. So we'll look at we're going to look at Amazon because basically, I noted from this wave 4 low here, 100 tick chart here, which is kind of a bit better than a sort of 5 or 10 minute chart here. It's just got more detail in it. And I really like the 20, and I'll drill into the 10 tick too if I have to. So this wave 4 here, we've got a nice wave 1 and 2 and 3 and 4 and 5. Because we've got 5 waves here, that means after an ABC correction, it's a perfect picture because it's just come back down to the 61.8%, exactly. I mean, it does it sometimes and sometimes it doesn't, and anyway, it's quite amazing in its own way. Look, we're talking about having 5 waves, 1, 2, 3, 4, 5 up here for wave 1, so we're looking for wave 2 to come back. It does seem rather complicated for wave 2, so I'm a little bit hesitant now, but it does play out quite nicely as wave A, and then a B wave, and then a C wave here. This does not play out nicely as an impulse wave here, but I'm going to leave it here for the time being. Now, this is not the normal behavior of a wave 2 here, because it's rather complicated and time consuming. So I'm a little bit concerned about it. Okay, so that's noted. But at the same time, we need to trade what we see. So I would have had this one up here, then I would have had it here, and now we can lower it down to this one here. So a breach back above this high here would be the catalyst to move in long at that point there. So that's where we'll that's where we'll put the target there. So an entry at 981, and then the stop needs to go back under here somewhere under the 72. Okay. If it moves up, so let's see if it gets triggered. And Googly Gob will be in the same one as well. So Alphabet here, just cutting a long picture short here, just in this case here, If we get support on 981, then we can go long from that point there as well. We can bring that, I would have had it up here, but we can bring it down into this space here. But I can't draw on this side of a tick chart. This was our target last time we spoke. We haven't gotten there yet, and you know, hey, it may do that. But you know, as well, I won't go into all of that. But main point here, 981. We need to be long at that point, and the stop needs to be back under the wherever the low is down here by a point or two, depending on what number it is. When you're going long, if you the numbers between 1 and 10, so 1 is the strongest number, so 1 and 10 are both number ones, and 5 is the second strongest number. So you'll either put the stop. You'll either put the, well, here we go. So yeah, so this target here looks like it will probably come into play now, and this will be some sort of A wave, an A and a B and a C for the B, and then down for the C in 5 waves, 1 and 2, then 1, 2, 3, 4, 5, 4, 5. So we'll come down here further. So yeah, if that's the case, and if it drops out of the group 2 area here, and then finds support back in here after it's come down here somewhere and gets back into this, needs 65 as support, glean your first small position there, and then a larger position on top of 72, and then back onto this one here if that's going to be the case. If it holds here and doesn't break that low here, then long, same again here on 981 here. As I was saying before, yes, between 1 and 10, 1's the strongest number. Halfway between those is number 5. So you've always got the choice of putting a stop above the 5 or below the 5. So if you're putting it above the 5, the next strongest number is 8. So you don't want to put the stop at 8. You can put it at 7, or you can put it at 6. You'll get a better result putting it at 6 than you would at 7, just naturally. And then if you're going under 5, you don't want to put it at 4, because if it's going to come down and hit 5, it might just spike through to 4 depending on how many orders are there. So, and then you know that 3, that's to me is the 4th strongest number. So under 5, it's much safer to put it at 2, because then otherwise you've got to go under the 1 at that stage, not 1, 2, 3, but under the next whole number at that stage. Well, this is already triggered off, so it's on close here, so it's just spiking around. But it does appear that we're in the bullish mode here now. So let's just see what Amazon did on that close. Well, that's a bit much, isn't it? Okay, all right. I'll just sign off on that. Cheers.